Let's do this quickly. Okay. Hi, everybody. So, first of all, can you hear me? How is the sound? Can you hear me loudly and clearly? Can you see my screen? How is everyone? Also, my microphone all should be good. Okay, good. Thank you very much. Thank you very much. So welcome everyone. Welcome. It is, for me, it is Sunday the 15th of September. It is 10 o'clock on a Sunday morning. I hope all of you are well. Let's go through the market. So first of all, let's have a look at what is going on with regards to this stuff here. So we have got not much happening on Monday. All right, so not a lot happening on Monday, and that's really, I think the markets will continue to tick over. They had some big moves on Friday. I think that's going to be the case. What I really want to be paying attention to this week, which will be the most important stuff, will likely be the Fed's interest rate decision, and we're going to see a shift, a quarter basis point or 25 basis point. And so we're likely to see, so this is where it gets interesting, because we're going to go to the charts, we're going to have a look at the dollar index, we're going to see how the dollar index is performing. But generally speaking, when a currency has a higher interest rate, 3, 4, 5, 6%, generally it strengthens the currency. Part of the reason for that is that big institutions like to borrow money from a currency, sort of do a carry trade, which means that if they can find a currency, for example, the Japanese yen, which is at 0%, if they can borrow a whole lot of yen and then sell, so they'll buy a whole lot of yen and then sell, for example, let's say the Australian dollar, which is maybe at 5.5% or something, they can then pocket the interest rate difference. So they're borrowing one and selling at the, or buying one and selling at the other, or borrowing and lending at the different rates. So imagine, for example, that you could borrow from your bank, you know, $1 million at 0% interest. So it's not even going to cost you anything. And then you knew a whole lot of people who were desperate to borrow money, but maybe couldn't borrow that money. And so what happened is you said, fine, I'm going to lend you 100 grand and you 100 grand and you 100 grand, and I'm going to charge you 3%. I'll give you 3.5%. I'll give you 5%. I'll give you 4%. Knowing that you're never really going to have to pay, you'll have to pay the original lump sum back, but all the interest that you've accrued, you'll be able to keep. So that's a carry trade. So what happens is that generally speaking, when the interest rate goes up, this currency tends to strengthen, but the dollar hasn't been strengthening, the dollar's been weakening. And I want to go look at the dollar to talk about that. But what's interesting here is that the dollar is technically due to strengthen. It's due for a correction. But at the same time, we have this interest rate decision where we know a rate cut is coming. And so that usually would weaken a currency. It's not a big rate cut. It's a small one. It's tiny. But the idea is that it'll cut it down a little bit. So it'll tend to weaken the currency. That's the fundamental philosophy. That's what happens. So that's what I want to pay attention to. I think that that's going to happen on Wednesday, and that could potentially create some movement in the markets. We also then have the interest rate decision out of the UK. So there's no rate change here, but just letting you know. But what could happen then is any discussion about what's going to happen there. Then we've got the jobless claims. So this is important because part of the reason that you might lower an interest rate or cut the interest rate is because you want to stimulate the economy. Now, the US economy is doing incredibly well. So they don't really need to cut it, but they're going to cut it a bit here. So we might want to be keeping an eye on whether there's a big jump in initial jobless claims. That's really what it's going to be about. We also want to see what happens with existing home sales and with manufacturing as well. So we want to see what happens with that. So if there's any signs of stagnation in any way. Then we have the Bank of Japan's interest rate decision. I think they're going to try and keep theirs stable. In fact, I think they would like to increase theirs, but they're not really able to do that. There's some amazing YouTube videos about Japan and the impact. They've had interest rates low for so long, for 20 years or something, but for so long that most people's lives and incomes have settled around that fixed interest rate. It's almost like if it went up or changed, there would be repercussions across the nation, because everybody's budget and income is kind of really tied to that interest rate decision. I can't remember where I saw it, but it was like a Bloomberg or Reuters video. It was really interesting. It was about 5 minutes long. All right, so those are the things that I want to be paying attention to this week. That's really where there's going to be some stuff. Let's go and have a look at why the let's go have a look at the dollar index just to see how that might impact it. So let's go across here. Let's just change this, because you can't always get the dollar index where you are. But let's have a look at it. So here's your US dollar. So this is the dollar against a basket of 8 other currencies. And it goes all the way back here to the birth of the currency markets, ladies and gentlemen, which is in 1973 officially, but we go all the way back here to 71. So 73 is around about the time that the currency markets were born, but back then it was exclusive to central banks, all right, federal banks, central banks, and maybe a few institutions, because people had to transfer money abroad and stuff. It was exclusive to them. It was only in 97 where it became publicly available to trade. Let's just put it here somewhere. It doesn't really matter too much where, but somewhere around here. And let's just thicken that up. Okay, so it's really only been since then that that it has been available for us to trade. And here's where it gets really freaky. It was although we've all known that stock markets have been around going back more than 100 years, to start to be able to trade off your computer and do that was around about 2008. So 2008 puts us at around about 2007, 2008, somewhere around this period, more or less. A little bit before, depending on where you were, was where you could start to actually trade from home like we do now. And the spreads were crazy. The euro spread was 1 to 2 pips, like 3 pips. GBP was 6, 7 pips, insane. Pound Kiwi, 13, 14, 15 pips. No kidding. So very, very different from where it is now. But the reason I'm telling this is I want you to understand how recently we've been able to trade, how recent it is. Okay, so just 2007, around about that period, I got into the game. I started looking at it in 2008. But I would say that I started trading in about 2010. Okay, so that's how early it is. Next up, look at where the dollar is now. So look at where the dollar is now and look at where it has been. So if we take a box and just price where it is now and go all the way back, I want you to see how often going back 50 years, how often the dollar has been in this price area. In fact, I would say that this is probably drawing a line right through the middle of where the dollar has been for most of its life. So the first thing is that when you hear the dollar is weakening, you can see here that against the other currencies, its value is roughly in the same place where it has been for the last 50 years. But due to inflation, and this is the same for every single currency in the world, a dollar today does not buy as much as a dollar in 1970. So the reason I'm showing you this is I want to clarify, I want you to see with your own eyes that the dollar hasn't, it's not fallen off a cliff. We saw a big spike here, but other than that, we have not seen anything fall off a cliff here. Most currencies tend to stay within general kind of areas. Most of certainly G9 currencies. Let's say G8, let's exclude Russia for now. So I wanted you to see that. But moving to where we are today, we are stuck within a range. We have multiple touches at the bottom, multiple touches at the top, and you can see that we're now sitting at the bottom of the range. So all of this gets me to where I'm going for this week, is that yes, at some point we know the dollar is going to break out of this range. We know it is at some point. But the number one rule for those of you who are newer traders is that when price is stuck in a range, doesn't matter which price it is, whether it's a stock, an index, or anything, when it's stuck in a range, doesn't matter how aggressively it's charging towards that side of the range or that side of the range, and you think, wow, this is really bullish or bearish, it's definitely going to break out of the range. It doesn't count until it's broken out of the range. So we always have to wait until we see a really solid break outside this range. So yes, could we see this week, could we see the dollar break out of this range? It's possible we could see it happen. We are near the lows and the dollar could weaken with a rate cut, could happen. But here's the thing. First of all, we're not outside the range yet. So it's really important to understand that we could see a bounce. So price is overextended to the downside. It has had a long run without a really strong correction. We've broken this immediate downward sloping trend line. We have had a bit of a double bottom. We have got bullish divergence. So it's hinting here at a possible move higher. It doesn't mean to move all the way to the top of the range, but we could see that happen. But at the same time, we didn't break this high this last week. We came up, we produced a lower high. So we're in what we're actually in now is a mini range. We're in a little bit of a range here on the daily within the bigger range on the monthly. So that's what I'm going to be watching for this week. But if we break above here and we break through this downward sloping trend line, we are probably going to work our way back up to the top of the range, which means we're going to be in this range from now till December, potentially, possibly. So this is where it gets interesting. We're in a range. The dollar has been weak. The rate cut is not a surprise. In fact, it's very possible, ladies and gentlemen, that the reason the dollar has been weakening is because there's been an expectation for a rate cut for months now. And therefore, the market's been expecting it. It's been expecting a weaker dollar. So it's been behaving as though the dollar is weaker. And that is a cause and effect. So it causes a weaker dollar because they've been expecting it. So everyone's making their transactions around anticipating it. And so it's actually caused it anyway. So you could have a correction now, because even though we're only getting the first rate cut now, the market has been anticipating it for months, and therefore we could get a correction now, which explains why it could strengthen even though we get a rate cut. But that strengthening would be a temporary thing. It would be kind of like because everybody has already effectively achieved their profit targets, they would take profits from shorting it, and then it would come back. Remember that when you get out of a sell, a buyer has to come in to take your place. When you get out of a buy position to take profit, a seller has to come in. So if all the sellers decide to take profit now and get out, buyers have to step in, which will boost the dollar back up. Does that make sense? So my point is this. It's not a foregone conclusion that the dollar will necessarily weaken with the rate cuts, but it could. So we need to, I'm just trying to, there'll be traders who'll be like, it's a sure thing, it's guaranteed. But if the dollar suddenly strengthens, I want you to understand why that could happen. Okay. And the goal, ladies and gentlemen, is always to believe the charts. Always. If you have to choose between what the fundamental is telling you is supposed to happen and then the market doesn't do that, you need to look at the charts, because the charts were likely telling you what was going to happen anyway. So the chart could be bullish and you were expecting the news to be bearish, and then when the news came out, the market went even more bullish, and that actually usually you always go with what the chart says. Okay, so that being said, that kind of tells us where we are. Let's now go to the charts. Let's have a look at this very quickly. And again, I really want to do this quicker today. So will it weaken if the rate cut is bigger? That's a very good question. And yes, I think that would be the reaction. There would be a bearish reaction if the rate cut was bigger than it was expected, because there'd be a bit of panic around that. I think that's a really good question. And I think, yes, that would be the case. Do I think it's likely to happen? I think the odds of it happening are very, very slim, because the US economy is still outperforming everybody else on the planet. It's still outperforming everybody else on the planet, and it is still in very, very good shape, relatively speaking. So it doesn't really explain why they would need to do a bigger cut, but your question is bang on. And in fact, the fact that you considered a question like that, is very clever, because we need to think of other possibilities outside of a little bit of a box. So thank you for doing that, by the way. So here we go. We've got lower highs, lower lows, but ladies and gentlemen, this could be a bull flag. What does that mean? It means that we could be going up, and a bull flag is often, let me just get to my little pen here. Bull flag is often when you get a bit of this happen and then it just carries on. It's like a consolidation and a retracement in one go. So this could very well be a bull flag. So euro dollar, if we break through this, would be a bull flag. Now, I should also tell you that I used to be, for a very long time, I've been trading for 15 years, and for 10 of those years, I really didn't go for trend lines, like sloping trend lines. Doesn't do it. But lately, I use them, and anyone who obviously knows my program, I use them because, yes, they are a very good, I don't use them in the traditional sense. People are using them because price can, they might do buys or sells of them. I use them as an additional layer of organizing the data. just an additional layer of organizing the data. But yes, it's true that if you put a kind of line across here and price breaks through it, that the probabilities that the market is now going to take off are higher. So I use it very much as a line in the sand. We've got a low here, so let's just clear this. A low and a low and a low. And yes, if I draw a line through here and then we break through it, there's a very good chance if we break through it that this bullish momentum has shifted, because the market goes down at certain angles and it goes up at certain angles. And so when it breaks a trend line, that angle is shifting. So the angular momentum is shifting, and that's what we do there. Anyway, let's move on. So I'm keeping an eye on that this week. Sterling is stronger. Oh, let me go back to this. I want to show you something else. So we've got the monthly for euro dollar. What do we see? We see that there was a range. There's a range here, ping-ponging between the two. But we can also see now the price has really got up to the top of this. So it is looking, ladies and gentlemen, it really is looking as though there's a lot of potential for this to break out to the upside. But until it does, please treat it as though it is still in a box. Please treat it that way. Let's just do this quickly. Clean up. Okay, so please treat it as though it's still there, but it is looking bullish, and that is a bullish breakout pattern. This week could be the thing that does that. Sterling, in comparison, Sterling is a little bit different, because Sterling has, after being this weak, and it's very interesting to see. I don't have a quick answer for you, but it had to do with the bond market. The Bank of England made some changes to the bond market, which then started to turn the pound around and strengthen it. And at this point, I remember everyone thinking the pound's going to fall off a cliff, and then it reverses. And ladies and gentlemen, if there's a bit of experience and wisdom that I can send your way, and so a couple of things. Paul is an outstanding trader. Like, he really is very clever. I think he has I think his IQ is smarter than most people. He's incredibly smart. He's definitely smarter than average, without a doubt. I'm of average intelligence, but I have a very good skill at emulating, copying, and imitating other traders. So if I want to pick up a skill, I look for someone who's good at it. I follow it until I get a sense of it, and then usually by the time I do that, I understand the idea, and then it's mine, and then I can run with it. So I picked up that habit from my childhood best friend. My point is this: is that with the markets, we can get an idea in our heads which will be disproven very quickly. And the reason I said that is because you'll get tips like this from Paul as well. Make I spoke about Paul, because you'll get tips like this from him, and he's trying to bring in a whole lot of other traders from around the world that have different ways of looking at data to make sure that you get as much exposure to clever thinking and experience as possible. Anyway, let's just go back to this. So here's an example. So when the pound weaken like that, you'll be looking for an explanation as to why that's happening. And you'll be like, okay, that's it. And in your brain, you'll go, the pound is going to continue to sink. There's no way it's ever going to turn around now, ever. Like, all the media and all the news will be so bearish on it that it'll be impossible to consider it can reverse. And then suddenly it'll start reversing. And so suddenly something comes in from the other side. Bank of England comes in, makes some changes to the bond rates. And next thing you know, the pound is popular again and people start buying it, and it completely reverses. It doesn't just reverse. Suddenly it's stronger than the euro. Stronger than the euro. And my point is this, is that if you allow the media and the news and everything to stick stuff in your head, they often it's called myopic vision. They focus only on one or two things. They don't see the big picture, and they tell you that this is how it's going to be. And the problem was that none of them ever consider the fact that the Bank of England have a whole lot of different tools at their disposal to influence the weakness. But the reason you do this, the reason the central bank has the ability to influence their currency is very straightforward. The whole reason the currency market exists is so that you can import and export, so that every country is building an economy around buying stuff that it doesn't have from abroad, and exporting stuff that it has that other people don't have. So there's this trade between other countries. And so they have the ability to moderate their policies and the interest rates and do all these different things. They've got a whole lot of different levers to make sure that it's benefiting their economy and not destroying it. and adjusting bond rates and a few other things. That's what they decided to kick off, and it really worked. And so the problem is that when the media becomes myopic, they think, oh no, this is happening, and they only look at one or two things that are happening, not considering the fact that the central banks of most countries have choices. There are things they can do to maybe turn things around and adjust stuff. Bank of Japan has done it now with the yen. They didn't want the yen to weaken any more than a certain point, so they started implementing a few policies, pulling a few different levers, and then eventually the market starts to realize, actually, we want to buy yen, we don't want to sell it, and then traders come on board, and then institutions come on board, and then eventually the market starts to change direction. So there's usually a rate, which is why when we're dealing with currencies, we have such small fractions of a currency. It's very small. We think it's big move, 500 pip moves, but that accounts like a pound. It's like a different, like it's a very small difference. So my point here is just to explain to you that when you don't let the media get in your head and tell you, oh, there's no way the dollar can strengthen here or weaken here, and then suddenly for the next year, it's super strong. Just accept that, take it from me and other traders, that the currency markets, things can turn around. So never get it in your idea that it's a sure thing. Just never do. All right, cool. That being said, let's move on. Aussie dollar, US dollar is stuck in a range. Okay, it's stuck. Bullish engulfing candle. So yes, a lot of these are hinting at a possible breakout to the other side. So here again, we had a little bit of a range here as well. But actually, if you really had to be a stickler, you'd put a line like that, and you'd put a line like that. So it's kind of as a bit of a pressure, but so we'll see what happens with that. Dollar Swissy. We've got dollar Swissy looking relatively weak, but also sitting at a key level of support. You can see the level of support here. We could see a breakout. So just be aware that we could also have a bit of a bounce this week. We could have a bounce this week. There's a lot of possibility for that. Dollar CAD is stuck within its range, but it's also at the top part. So what happens in a range? Nobody knows this. I'm about to teach you something that I've never seen anyone else talk about. But a range is a lot like a tornado. It has secret spots. So in other words, within a range, there's a central axis around which price is pivoting like a tornado, spinning. There's a central axis, but then there's usually an inner range and an outer range. Okay, so you can see it all the time. I'm going to go show you this. An inner range, which is this part here, and then an outer range, which are these little parts exposed over here. And then you get little bits where it tries to break out. So you can normally see this. And it's to do, in a way, it's almost like it's revolving around that central price. So if we had to go in here and have a look at this, what would be my central pivot? So my central pivot is usually going to be right in the middle here. So you can kind of see the central part. My inner range would then be this inner range here. So there's an inner range going to here, which is these levels over here, going through to there as well, and along here. The outer range would then be something like this, going to something like that. There's your outer range, and there's your little bits that break out, but you've got your outer range, your central pivot, and your inner range. And so it swivels around that. So it's nice. I want you to be aware that those exist. And you can find any range. You'll find the central pivot, the axis. You'll find the inner range and the outer range, and then little attempted breakouts outside of it. Hopefully that makes sense to you. So dollar CAD is range bound. Dollar Sing has broken out of its range. And here's where it gets really interesting to me. Dollar Sing had a little bit of a mini range here within a much bigger range up here. So it has a much bigger range up here. It appears to be breaking out of its range, which also supports the idea of a weaker dollar. Also kind of supports the idea of a weaker dollar. Dollar Sing is very, very similar to the dollar index. Very similar. Also, one more thing. For those of you who maybe haven't heard me speak before, but I want you to understand that when you think about the US dollar in terms of the currency market, it makes up like 60% of the currency market. Then you've got the euro, which makes up about another 30%. And then you've got all the other currencies, which make up like the remaining 10% of the 100% that makes up the currency market. But the dollar isn't just in the currency market. The dollar is in the commodities market. So most commodities are priced in US dollars. So then you have to look at the dollar as its component within all of the commodities markets. And it's the only currency in that market. And then you have to look at the stock markets. A lot of stocks if not the majority of them, certainly the majority of the big ones are priced in dollars as well. So the stock market is dollar priced. The commodities market, entirely dollar priced. Crude oil, gold, all against the dollar. Then, and obviously you do get gold against the euro and gold against a few others, but for the most part, the dollar is a bigger part of those markets than it is within the currency market. So just want you to keep in mind that when we talk about what the dollar is doing, it's being impacted by the stock markets and by the commodity markets, and not just the euro. A lot of people are like, oh, well, the euro's, the next biggest kind of currency against the dollar. Yeah, but the euro is not present in the commodities markets or in the stock markets. Does that make sense? Okay, sorry, so let's go. So let's move on. Dollar yen, having that big correction. We know why this is happening. Bank of Japan wanted to reverse it. They didn't want it at that 150 mark. They want the reversal. They changed their policies. It's weakening. So the one more tip nugget as well, dollar yen does its own thing. It always has. Bank of Japan has a very good amount of control over their currency. And so they influence it a lot. So you should always trade dollar yen. If everything else is looking like you're getting, for example, a stronger dollar, but dollar yen looks like you're getting a weaker dollar, go with dollar yen. So always follow dollar yen as to what the technicals are telling you, especially. Okay, and so the question has come in. We'll go look at other currency pairs as well, but the question has come in, what's going on? Why are gold and silver so strong? There's a couple of reasons for that. So first of all, one, it was range bound for a very long period of time. So over here, and considering that it started to break lower over here, this is where it maxed out in the past and then broke lower here. That puts you at around about 2011, and it really only broke out in 2019. Okay, so 2019 it broke out, and so it's had a very, very big run. Then it was contained again. So every time a market is contained, and once it breaks out of that range, it has a run. Basically, it was contained until, we need to just check when that was. When was that again? Sorry, when was that again? So it broke out in March this year, and it's been running. So the simplest way for me to say it is, yes, there's a demand for gold, but for traders, it's just a simple consolidation breakout and then a run. And boy, is it running. And so, look, there's different reasons. I know China is accruing gold massively. Russia potentially is doing that, but China is accruing gold. Like the most, out of all the countries, they're accruing gold at a ridiculous rate. But also, traders and investors will see the trend and add to it. So the move isn't purely fundamental. There's a part of it that is coming from an underlying accumulation of gold, and then on top of that are additional transactions of institutions spotting the trend and adding to it. And so right now that trend is benefiting. It's like a snowball effect. It's got a original layer of fundamental reasons, and then it's got other stuff on top of that, which is probably technical reasons. And so it starts to build from that. Okay, it is definitely overextended now. We've seen it. If you look at past points, you could see where gold here touched the 20, and the next time that it touched it was here. So it had a really long run before it corrected, but after it corrected, it came right down and it just crashed. So you need to understand that kind of from this point until this point, gold didn't do anything. But also, so we've got to move from here to here. So yeah, we are just continuing to climb and climb and climb and climb. Are we overextended? Yes, we are. Am I cautious? Yes, I am very cautious. Here's where it gets really interesting. So for technical traders as well, we just had a consolidation here on the weekly. We had a consolidation and a breakout. And in addition to that, we just had a pullback and move. So on a weekly chart, this is not overextended. It had a big move, then a beautiful consolidation, and then a breakout and a retest, and it's on its way. So from a weekly perspective, gold is not tired. It's looking amazing. From a monthly, it's definitely overextended. And from a daily, it looks really good. From a daily, it's also had a consolidation and taken off. So I'm just trying to highlight here that yes, at some point we will see a correction. And when we do, it's probably going to be quite a big one. But also, again, something I want to alert you to here. During this period over here, not this time. Sorry. Ugh. During this period over here, which is when I was learning how to trade, probably starting around about here, actually, yeah, about here, gold just ticked up. And at this time, gold was going through the roof like it is now. and people said it's never going to come down. It's never going to come down. And it did. Like it hit a ceiling over here, hit a ceiling, and then went sideways for a couple of years, then broke down, and then went sideways for 6 years before it broke up. So the reason I'm telling you this is because if you're thinking now that gold can never come down, I'm just saying it could. Eventually, if it has a good correction, we could see it come all the way back down here. So don't get caught up in mania that can happen as well, that like it's out of control. Yes, it's bullish and it's great for traders, but we could see it revert. It's possible to have people start selling gold. They could be accumulating gold now because when it crashes, they want to be able to sell it. So, you know, people, that's what happens. I just want to show you that that could be the case. We could see a deep correction when it happens. Then if we have a look at silver, silver to me has got the greatest potential to go, because if you look, it's got a lot of room to the upside here. It's very nice and bullish. It's had a very nice breakout at a retest, and there you go. My guys will recognize this as a beautiful bullish continuation candle. So this in itself is actually a buy setup, and that means you'd be looking for buy setups now. Also, if we remember, I was talking to you about bull flags. If we just bring this down, we've broken through that. So this is in itself is a bit of a potential buy signal. But also this is a bull flag in its own way. It's a very messed up one, but it's also a bull flag. We've broken through that. So if you look at it from a weekly perspective, okay, it's a very messed up one. It's not a great one, but it is a bull flag. We've just broken through that. So entries for traders are from above the high here to the stop loss there or stop loss there, targeting 3 to 1, but it gives a good indication of maybe where it can go. We know silver has more upside potential. It doesn't trend as smoothly as gold all the time, but it could be a good one. So silver is worth a look. Okay, we are now 30 minutes in, and I want to make sure that we kind of do a little bit more. Let's look at crude oil. Crude oil is nice and bearish at the moment. There we go, very nice level of support we broke through. Sometimes the market doesn't have to come back to test. It doesn't have to come back here and test it and carry on. It doesn't have to. But if it does, that's a nice little bonus. So that's an extra tick in the box as you go. We are at a possibility here. So this is what I'm looking for this week. I'm looking for more wicks like this. So if we get a whole lot of wicks, if we get where wicks are here and price is unable to break through that, then it's probable that this is going to be the resistance area and price is going to carry on down from here. So that's what I'm looking out for over here this week as a shorting opportunity. This could even be one potentially here, entry below the low, stop loss above the high of this candle, looking for it to continue down. Let's get a sense of where we are. So you do need to know where you are, where the next major support resistance level is, which is about there. So just to be aware of it. So again, if I was going to take this as a trade, I'd be looking to go short. So shall we just have a look and see what's going on? Let's go across to the this and have a look at what this looks like on the daily wave rider. So daily wave rider is telling you as a sell. Okay, cool. Yeah, I mean, crude oil is in a very interesting place right now because obviously cars, we are without a doubt moving towards hybrid and electric cars. Maybe not pure EV, but a lot of hybrid. Most people are pretty much switching over, but crude oil is used and oil is used in a whole lot of other areas, fertilizer, all kinds of other things. But you can see they're going to be taking a bit of a hit. So I do think long term, whether it's over the next 20 years, we're going to start to see the demand for crude oil is going to start to slip. Anyway, that is what I'm looking for. So there could be a potential shorting opportunity over here. Brent is the same. So there's no difference really between Brent and crude oil. In terms of them, they're so highly correlated. My point was just to show you that yes, normally I would expect them to come back up, but they don't have to. Okay, so if we go look at this, is this from a Fibonacci perspective? Is it a Fibonacci level? It's kind of a 382, so it's a minimum retracement. So I'd keep an eye on it for this week. There are ways in which traders can enter trades. This is a more advanced master trading approach. You know the trend is down. You know the price is retracing. You expect it to continue down. So what do? You place an entry, a sell, stop here, and a sell and your stop loss here. The idea is that this is very good for end of day traders. You place your order around Friday, the low of Friday, with obviously 2 pip or whatever the spread is below the low, spread above the high. And then Monday, you go to work. When you get home, Monday, the market has moved down and triggered you in the trade. On the other hand, maybe on Monday, the market has moved up another candle, So then you update your order, sell order there, stop loss there. So you're trailing a sell stop behind each until the day that it moves down. But that idea, ladies and gentlemen, is based on the idea that you expect the market to head lower. Thank you, guys. Is it the same to trade either XTR or XBR? No pros or cons? No real pros or cons. I trade US oil. They're so highly correlated that trading both is just doubling up your risk. They really are highly correlated. In fact, they're more highly correlated than anything else that I can think of right now. Certainly on this list of instruments, they're the most highly correlated. So I would just trade US oil. I would look at both, and if you maybe one day you see a setup on one, you don't see it in others, but they're like 95% correlated. So I'd be surprised if you had a move on one that you didn't have on the other. I'd be very surprised by that. And that's great. Here's a good example. Go follow that and see if that is the case. Okay, so again, I don't want to carry on too long, guys. So let's go through the global indices. Global indices. Okay. Very bullish, very bullish. Okay, my only concern, how do I explain this? In the beginning, when you're a newer trader, you're just like, guys, just give me the rules so I can just lean on these rules to make money. I understand not every trade is going to be a winner, but like, just give me enough rules that I can rely on this being true most of the time. And that is the tough part. The thing is that as you progress, as you start to develop an eye for reading price action and you start getting more winning trades and you pick fewer losing trades, you start to be able to also accept that the market is unpredictable. So although you know that your strategy doesn't come with guarantees, you know that it works most of the time. And then you also get good at reading the market. So in addition to the strategy working most of the time, your eye for good setups improves as well. So your results start to improve from there. Does that make sense? Anyway. But it's like standing on quicksand. You are standing on the ground, but the ground can shift underneath you. So trading is a lot like that. But my point is this: over time, as a trader, you start to be able to take multiple ideas that appear to conflict with each other, and be able to make a decision where the probabilities of one happening are still greater than the other. So even though both ideas are equally valid, you look and go, you know what, I think this one is much more likely to happen. And so that comes with confidence and it comes with time. So let me give an example. We are overextended, and these are hanging man patterns that often occur at the end of a trend. We also have September, which is often a very bearish month, and we're not through September yet. But, so those are all reasons to expect a correction. But, so that's the one idea. However, the market is still very bullish. The reality is it's super bullish. It's just producing these and it's incredibly healthy. So is it possible that, look, what I want you to take away from this is really important, is that the market is bullish. So no matter what you hear, no matter what you think, no matter what JP Morgan and this guy and that guy says, the market is bullish. We know this because we can see it's bullish. And that's really important that you accept that the market looks bullish because it is bullish. And I want you to understand, you have to trust the price action. So that being said, I do trust the price action. What I'm trying to say here is we're not free of September. So September is usually the one month of the year where I would expect it possible it could become bearish. We had a bearish week last week. We actually broke the low and then we managed to recover during the week. So we actually managed to have a bearish Monday and then recover from that. Even here, I think it was Wednesday, and then drop right down and then recover. So we are bullish. There's a lot of bullish sentiment in the market, and there's going to be a debate. Paul's going to host a debate between myself and someone else about who we think is going to win the US election. I believe, and I'm going to present my case for it during the debate as to why the Democrats are going to wipe the floor. And so I encourage all of you, if you get the invite, to attend, because then I'll make the case for why they're going to wipe the floor. Their policies are very similar to the current market's policies. And if you look at how the market has been responding since 2020, so if you go back to January 20, since here, you can see how the market has been very bullish. It was due for a bear market anyway, but it recovered really well and recovered really well. So I believe that the new administration will be very good for the bull market. It's going to boost small businesses. So the Russell 2000 is going to boost it. So yes, we'll still get corrections. We will always get corrections. But the market overall, I expect it to be, we're in the beginning of a new bull market. I expect it to continue being bullish. So my point is here, watch the weekly. Let's just see what happens this week. Wait till we get past September. Just be prepared. If we have another correction to the downside, we need a nice correction down here. This is what we need. We need a correction down to the moving averages before we take off. My point is we still need that because it's very good for the market to kind of lose a bit of weight and then allow you to pick it up again, or have a fire sale and then pick up again. So I still think we could have that. The hanging mans are often show up at the end of trends, so we could still have that. I just want to get through September, but the markets are bullish. So how do I combine the two ideas? I go, there's a lot of buyers in the market, They don't want to stop, they don't want to sell yet, they don't want to quit yet, but eventually if there is going to be a correction, we'll see it. Okay, so just be a little bit cautious this week, but the market is super bullish. Overall, from a weekly perspective, it's not overextended. We did have a double top form here. The market shrugged it off. Let's see if it can break through here. So we have, this is a great example of bulls and bears fighting. The bulls keep pushing back, the bears keep trying to step in, but right now the bulls are winning. That doesn't mean they're going to win over the next 2 weeks. We could still have a big correction over the next couple of weeks. We could. Once we get past October, then I'm pretty happy. I think we'll be okay. So you can see a lot of this. So just be cautious this week. If you find the market suddenly drops, if you find the market keeps going, we know there are bulls in the market. If you find the market has a big drop, it's because we know we're not free of September yet. And therefore, there's still people taking profits. Because if you know September's going to be bad and you've had a great year, what's the smartest thing to do? Take some profits in September. And if it has a correction, you can then take those profits and you can buy it again and you can compound your position. So it's cause and effect. So I just want to take you through these. Just be cautious. We are at key levels. We could get another rejection. We could see that. If we get another rejection, we could see a bigger correction to the downside. Just be a little bit cautious of that. Okay. Overall, the markets are still generally bullish, but there are a little bit kind of, what I'm interested in, by the way, is HK. We could have a higher low here. So I'm very interested to see if we move into this, if we break this high, if we stay above this low, we could see a shift higher. I'm still generally bullish on HK, but bullish over 2025, I guess, and China as well, which is obviously having a really tough time. I'm not bullish on China. I'm bullish on HK. Let me be very clear. I'm bullish on HK price action wise, and I know that they are within the same. If it's a Venn diagram, there's a bit of overlap. Okay, very quickly, guys, let's talk about the pairs. So yen pairs, I still expect continuation to the downside. All of the, we should start to see it now. So we should start to see the Wave Rider producing bearish setups. I like that. I'm very happy with that. Let's have a look at the CAD positions. So CAD was potentially looking kind of bullish on some of these pairs, cross pairs. Let's have a look at EuroCAD, see if that's looking bullish. So that looks good. We've had a retracement and we look nice and bullish on the weekly. You could argue that there was a little bit of a kind of a pennant reaction here. If you want to go with that, that's fine. I think we look good. So that looks nice to me. EuroCAD looking bullish. Let's look at PoundCAD. PoundCAD also trying to break out here. Oops. There, could see a nice PoundCAD breakout. So PoundCAD could be good. If you go have a look at these, they should be bullish. If you go through, there we go. So these all look really nice to me. So the PoundCAD, let's look at KiwiCAD. Okay, KiwiCAD's not there yet, but PoundCAD, EuroCAD, I like the look of those. CAD Swissy, we'll see. Okay, let me take you through the Swissy pairs. We're almost done, guys, about another 5 minutes and we're done. So I spoke about this in the last one I did as well. Are we going to see a reversal of the Swissy pairs? Are we going to see them? Is there bullish sentiment here? I spoke about these bullish candles. It was a monthly, so this was August. We're in September now. Excuse me. I want you to see how all of them look like they could potentially turn around. Not CAD Swissy, but Euro Swissy could see a potential reversal. We'll see if that's the case. If we break above the high here, that becomes a double bottom. We look at Pound Swissy. We've definitely got a range now. I'm looking to see if we turn around. So we've got this bullish divergence. And so I'm looking to see if we turn around. Kiwi Swissy. Very nice bullish candle. Let's see if we break the high. It's a monthly chart, so we need to see how this ultimately plays out. The reason I'm telling you this is because if this does ultimately play out and we see a reversal, we've got that bullish divergence, bullish candle showing in, double bottom here. If we see this start to turn around, especially on the weekly, we start to see ourselves break back up above that 50. That's going to provide us over the coming months with trading opportunities to the upside. So what am I looking for to support that? Certainly on the weekly, I'm going to be looking for a break of these kinds of trend lines, the weekly trend line, a break through there. I'm going to be looking for a break of this high here. So a break of that high would produce an uptrend. We'd get above the 50. We'd break through this trend line. We'd be doing all these things of breaking bearish setups. We break that downward sloping trend line as a bullish signal. Breaking above this high moves us into an uptrend. That's a bullish signal. And getting above the 50 period is a bullish signal. So that's multiple signals that would say we are turning around. And I wanted to draw your attention to that. That is actually it, ladies and gentlemen. So in other words, pound Swissies I'm looking to see this week if we start to head higher on those. The yen pairs I want to continue to look to short. Gold, you can keep trading it to the upside. If you're happy to do that, just be cautious of that. Just remember it is overextended on a monthly basis. Just manage it appropriately, as I've always said. But it is technically bullish. Crude oils, I think there's some good shorting opportunities there. The indices, just be a little bit cautious this week. And the majors, we're also going to see what happens with that dollar thing on Wednesday. Okay, I think that's it. Any questions? I can never just do it in half an hour. I'm so sorry about that. Can never just keep it to half an hour. All right, any questions, guys? So part of the reason I do this is I want you to learn how to read the price action. I want you to be able to look at information from different angles, but still get the same conclusion. Bitcoin, I actually don't have Bitcoin on this account. I'm sorry, it's this account specifically. I don't have cryptos. But I will say this, let's go and have a look at it here. So let's go look at Bitcoin here. Okay, what is this shape here, guys? What is this shape? What is that shape? Generally, what is it? I'm waiting for responses, by the way, sorry. Well, okay, I've drawn it badly. It's a flag. It's a very loose, but it's a bull flag. It's a bull flag. So if we break out here, we should continue up. Also, cryptos are, look, it's actually not that complex. They're a tech instrument. They're technology based. They are digital, so they're effectively tied to tech stocks in many ways. It's rare, but usually they're very correlated with tech stocks. So if tech stocks are going up, cryptos usually go up. It's not guaranteed, but it's 60+% of the time. I think we have a bull flag here. I think if we break up here, we look good. Generally speaking, you can see there's a lot of buyers here because there's definitely support. I think we look good. Depends on the crypto, so I'm going to use Bitcoin as my basis. All right, because Bitcoin's like the S&P 500. It's the basis. I mean, I should say it's like the NASDAQ. It's the backbone of all other cryptos. I think we can agree on that. It's the grandfather, the granddaddy, the grandmother, whatever you want to call it. It is the backbone of that. So what do I look for? I've been looking for breaks of these. So certainly I'd start to look for changes in this stuff here. So there's a little bit of call it a macro trend line. If we start to break through that, that's good. Then there would be another one, which is kind of a little bit more from there. Oops. There. But macro one, and then if we break through that, we're definitely going through it. All right, guys, I think that's good. Thank you very much. I always enjoy it. I'm sorry that I run over, but I do get caught up in it. And then I also want to brain dump some experience in, which is like when you're with Julian McCree, you get the same kind of thing. So I want to make sure that you get that. Ladies and gents, listen, have a fantastic week. And we'll see you when we see you next. But yeah, have a fantastic week. Trade sensibly, guys. This is a very achievable way to navigate the markets. Okay.